Wells Fargo shares have dropped over 50% since the start of 2020, and to compare, the S&P 500 is down about 30%. Sure, Wells Fargo has misstepped over the past few years, but it's still a cash flow strong company, and it's a great time to buy for long-term investors. So as of Friday, March 20, 2020, it's my newest position. I locked in a 7.6% dividend yield, and it makes up close to 10% of my entire portfolio. Unlike the 2009 crisis, this bear market isn't stemming from financial mismanagement. Big banks are much stronger after recovering from the housing crisis and the collateralized debt obligation issues. They can easily manage through the new global recession. Investors that can buy into this short-term volatility should see higher returns over the next few years. I've done deep research into Wells Fargo's valuation, but this is just a quick update today. I'll show you how the company has rewarded shareholders in the past. This history reveals valuable trends for investors. One way that Wells Fargo has rewarded shareholders is through dividends, and let's get the tough part out of the way. Wells Fargo cut its dividend by more than half during the last stock market crash, although it was one of the healthier bank stocks. After the cut, Wells Fargo resumed its trend of raising dividends each year, and by 2014, the annual dividend was already higher than the pre-crisis high of $1.30. This year, Wells Fargo is set to pay shareholders $2.04, and based off my recent purchase price, that's a 7.6% dividend yield. In the chart on your screen, you can also see the payout ratio over the last 10 years. It's climbed, but it's still under 50%. That gives the board of directors wiggle room to continue paying and raising the dividend. Another important way Wells Fargo has rewarded shareholders is by repurchasing stock. This new chart on your screen shows Wells Fargo increased its total buybacks over the last 10 years. For a while, it was buying about $10 billion back each year, just under, but over 2018 and 2019, Wells Fargo each year purchased over $20 billion worth of its own stock. As a result, total shares outstanding have dropped from over 5 billion to just over 4 billion today. And Wells Fargo stock is now trading at a deeper discount, so buybacks make even more sense. My percentage ownership in the company increases as total shares outstanding decrease. Although Wells Fargo and other big banks have announced they're going to stop buybacks due to this recession. It's a political move since stock buybacks have a bad rep, but buybacks aren't the real problem. And I'll drop a link down in the comments below. I answered the question, are stock buybacks bad? It's filled with some unique research. Wells Fargo has stopped its buybacks in the short term, but that's okay. It'll provide that much more safety to continue paying a bigger dividend. Now, I said this was just a quick update, so let's get to my final thoughts on why I bought Wells Fargo stock. Warren Buffett, via Berkshire Hathaway, has started selling Wells Fargo stock over the last few years, although he still owns, when I had checked, just over 7% of the entire company, and it's in his top 5 largest holdings. With this steep drop in Wells Fargo's valuations, I doubt he's selling any more of his stock, at least anytime soon. It's a rare opportunity to be able to buy a big, healthy bank with over a 7% dividend yield. Sure, the recession will slow economic activity, but Wells Fargo should be able to continue to produce healthy cash flows. The company will continue rewarding shareholders for decades to come. I appreciate that you stopped by today, and I'd really appreciate it if you just tap the like button down below as well as subscribe to my channel. It means a great deal to me. And if you want, drop a comment down below. Have you scooped up Wells Fargo stock? If not, what's holding you back? Or maybe have you found better investing opportunities? I'd love to hear about them. Reach out anytime.